Hi everyone, and thanks for checking out my channel. I'm going to have a look tonight at WTI crude oil, checking what happened last week and what could be the plans I could put forward in the coming days or weeks. So first, previous scenario I had in mind didn't actually materialize, as we can see here. I was looking at that compression descending triangle against 57 to see if we could get some break down at that level, and we actually got a break out above 59 that did actually invalidate that scenario, at least short term. I'm now switching a little bit neutral with actually a potential very bullish scenario should we actually manage to break above 64. Reason for this is that we would actually start proper accumulation inside a very large phase that's been starting from 34 up to 66, now pulling back slightly and now returning here. So it could be a double top, of course, but should we actually start consolidating under that level with some tightening range, something like this, then we could have an explosive move to the upside should we actually break. So be extremely careful now trading short since we broke that level, and the reason why I did actually exit my short positions a little bit in a messy way on that move here, but trying to cut loss the most possible, because definitely there's a risk to the upside. I don't want to hold any short position should that happen. Of course, there's the alternative scenario that is still, of course, very much possible, and that would be a rejection at that level and a retest here at 57. I feel that it's a little bit unlikely now. Many reasons for this. First, we've seen some very bullish report in the US about the stock, the withdrawal, and also the OPEC seems to be holding very well. So that figure I was looking at, which is some sort of a head and shoulder pattern here with the one shoulder and the other one here, is still valid until we actually break the 64 level, but it's getting a very lower probability from what it was at the same time last week. So definitely be watching this. Potentially we could see a possibility of buying 61 should we get any buy signal. Just right now we're having a bit of a divergence on the 1 hour, but that kind of divergence on that kind of compression here is a little bit giving quite often false signal, as we got a really powerful momentum to the first spike, and then of course it does actually get weaker as we are approaching the resistance for some rejection. But this is usually only showing that we actually getting some sellers on board to reload a little bit lower. So more into the thinking that we are more building some sort of a bull flag here, that if we actually drop below this, it will get bought very quickly around the 61 zone to return here and start recompressing 64. So I will probably not be buying here. It's too close to resistance. Buying breakout, I don't actually like that too much, but we will see. Definitely a little bit tricky to trade. And if we look also on the S&P 500, there was also that scenario here that got invalidated recently as well, with that divergence on the daily here. We're still pushing a divergence here, but as we can see, the momentum is picking up now without any major sign of rejection at that level. So we could actually go as high as the upper end of that channel, which is 4,500. So that's a fair bit higher, 10% almost. That will of course drive everything to the upside. So careful with short position in that setup. So yeah, if we look at that period of time here when it was actually consolidating under that breakout, to kind of assess how solid that breakout was, as we can see, so the open interest dropped, which is not really surprising when it's range bounded like this, but we can see that the swap dealers did actually slightly edge against lower price, and it did actually reduce the short quite massively. So this is definitely not bullish, but here if we see the managed money did actually load up long positions, so they are supporting that move. We know that they're still having room to push this higher, the 400,000 contracts, so this can easily break higher, and we can see that otherwise it was also positioning more neutral in terms of retail traders, but other large funds been actually reducing long positions. They've been trading against the trend quite a few times recently. So yeah, not highly helpful, no extremely clear plan on WTI, rather than probably watching what will happen for the first days. Should we actually break that 64, then we'll go really quickly to 66 and expecting some rejection there. Should we see rejection with some more divergence, short could be attempted at 66 with a relatively tight stop loss above, but trading long here, in my opinion, is a little bit risky. I would like some pullback here. Just get some Fibo. Actually, what it is? So it was here. Nope. Like on this. From the move to the downside, yeah, 61 area could be buy opportunity, potentially dropping. Yeah, 61 would be actually quite good, and I would be looking at this for some new compression under that 64. It would actually be a little bit healthier than just right now. It has little chance, I think, to push through just right now without consolidating. So we'll see whether we find a buy opportunity. It is possible, but yeah, let's watch it for the first few days before potentially entering some position. So yeah, thanks for watching. I'll be covering natural gas also tonight, and I wish you safe trading and a good week, and speak to you later. Cheers, bye.